I just wanted to get your visibility. How are the consumers doing?
First, great to be with you this morning. The consumers, it really is a tale of two cities. And I'm a believer in the K-shaped recovery. For much of our base, the prime consumers, they're hanging in there. The last numbers we reported, delinquencies, people behind on their cards were lower than the same time in the prior year, which I think is stunning. On the other hand, there are huge segments of the economy that are really struggling.
Roger, are you worried about unemployment here? I know you've talked about this before, but to what extent do you think these unemployment issues are going to really bleed over to other parts of the economy, primarily white-collar workers?
So I am really worried about unemployment. We've seen 7 straight weeks now with claims over 800,000. And I do feel like it is spreading more towards white collar jobs. A lot of companies reacting to the environment, cutting back. And so that's one of our big concerns going into the fall, especially if that gets combined with a second wave of COVID.
Are you worried, too, that banks here will start to really tighten their lending, that other card companies will start? What kind of access to credit will consumers ultimately have in the next couple of months?
So I can't really talk to other banks, but for us, we haven't had to make any changes since the first ones we made right at the beginning of the crisis. And in fact, even at that time, we didn't change our policies around credit line decreases, things like that, because we want to make sure we're there for our customers. I think what you saw in the first half of the year is most of the banks putting up very big reserves to get ready for the losses to come. And so, at least for us, we feel like we're now well positioned.
Roger, as Alex said on the way in, lending standards are being tightened, though. Does that mean that you're chasing share at this point?
So we do feel like we've been gaining share. We started tightening lending standards probably around 2 years ago. And they're really just with a feeling that it was late in the credit cycle. The other thing is, we've always been conservative in how we lend. And so that's given us the ability to continue to market. We're booking loans across cards, student loans, all of our lending products. And we believe we are gaining share in this environment.
So, if you're tightening your standards, though, and then you're also worried about unemployment and that spreading to white-collar workers as well, aren't you all then competing for the same small pool of better capitalized individuals?
So, the credit card business is always competitive. I think what you've seen, though, is some of the banks that were more focused on spend-based consumers, so the real higher end, as opposed to us, where ours is a lend-focused model. They've seen big challenges as T&E gets cut back, as overall sales. And so that's really given us the strength to continue marketing and booking what we think are very high-quality new accounts.
How do you describe what's going on here as the stimulus talks continue to waver? How in need are people of more money now?
So I think it really depends. There are a lot of consumers who really need money. And I think if it were up to me, I'd take the risk of too much stimulus versus not enough. Again, especially if you believe, as the experts do, that another wave of COVID is coming in the fall. And so if you can get money to consumers, they can keep spending, they can keep paying their rent, they can pay their other bills, and it keeps the economy going. If that starts to unwind and we see increased white collar job losses, I think that we could have real further pain in the economy.